And welcome to another MCO market update on Bitcoin. Bitcoin is pushing a little higher after the interest rate decision, which was nothing burger. Yeah, nothing happened, which was expected because that's what the Fed Watch tool told us. That's what most market observers and participants expected. No change to the interest rates. But yeah, after the interest rates, the market dipped a little bit. It's now recovering a little bit. Slightly up for the day, our good old Bitcoin, but not yet broken. The price has not yet broken above the previous swing high here at $97,500. I still think a fifth wave up would be possible. I've only marked it with a question mark here. It's not high confidence because A waves, as you might know, can be 5-wave movements or 3-wave movements. So what am I talking about really? So I'm talking here about a potential bullish structure from the Tuesday low. And we are tracking so far only 3 waves up. Okay. Now, yesterday, around the same time, I shared with you this support area and explain to you that as long as the market avoids a decisive break below that 50% retracement, we could get even 5 waves up in the A wave. That is a nice to have. An A wave doesn't need to have 5 waves, but if we get 5 waves, it is more clearly bullish because with only 3 waves up, the market hasn't really made a promise. Okay, now if we get 5 waves, the market basically tells us that it wants to go higher. That it not only wants to go higher more directly, but that even after the next pullback, it plans to go higher. Because that's a series then of higher highs and higher lows. So we should get a corrective pullback and would then expect it to go higher eventually. However, we only have 3 waves up right now. The market is currently, as we speak, or as I record this video, the market is trying to form a 5th wave up, but it's not done yet. So next indication that indeed this 5th wave to the upside is unfolding is a break above the B wave high. And then, ideally we land somewhere around 98K, here 98.4K, 98.9K in this 5th wave to the upside. That'd be great. Then we can adjust support for the B wave because this B wave support, which would follow after the A wave is topped, then afterwards we would expect a B wave pullback to unfold. That B wave pullback support area will then need to be adjusted with the price because the measurement of the support area for a B wave is based on the length of the A wave. Okay, so for now the A wave might have topped already in 3 waves, but 5 would obviously, as I said, be more clearly bullish, would give us a better setup along the way. So yes, this was quite a deep pullback. It was quite a deep 4th wave, but it held support. The bulls turned up around $96,120. Yeah, we have a brief break below support, but it's not a decisive break. It's not a sustained break below support. So it still is valid. I think the Nasdaq looks quite similar. Now that being said, first, short-term bullish, market can go higher more directly. Then we have 5 waves up. I'd be happy with that. 98K, 98.9K in that area. Then a B wave pullback before we go higher. That's the directly bullish scenario. Now going down from here would make it morph into something like a WXY structure, that this B wave is a WXY. That's absolutely possible. In this case, it would be WX, and then the Y wave would be an ABC itself. So this is the this is, let's say, the B wave scenario where the B wave is a WXY pattern. But for that, the market would need to turn to the downside basically right now. So interesting upside momentum right now, and let's see if we can get there. When the video is uploaded, maybe we're already in the blue zone. We'll see. But at least you know that afterwards then a B wave pullback should unfold, and I will update any support areas in our member area on Discord and tomorrow in the next video. Yeah, thanks so much. Hope you enjoyed the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.